Within my social circle, there is a large group of people who will take Bitcoin as legal tender, like, you can go to them and settle debts in Bitcoin, and they will happily take it. Think of Bitcoin as a bank account in the cloud, and it's completely decentralized, not the Swiss government, not the American government. It's all the participants in the network enforcing. It's almost always possible to be honest and positive. We can code wills, escrows, trusts, notaries, revocable chargebacks, proof of contracts, intellectual property enforcement. What Wall Street does can be done in code by Bitcoin. Figure out what you're good at and start helping other people with it. Give it away. Pay it forward. Karma sort of works because people are very consistent. On a long enough time scale, you will attract what you project. Currencies take the concept of money, and they take it native into computers, where everything is settled with computers and doesn't require external institutions or trusted third parties to validate things. People think about Bitcoin incorrectly. They think about it as currency or about gold or hoarding, speculation, about how much money do you make, when really, what it is an API for programmable cash transactions. Money is a bubble that never pops. It's a consensus hallucination. While the traditional banks and credit card companies lock down access to their payments infrastructure to a handful of trusted parties, Bitcoin is open to all. I think long-term, Bitcoin is a currency of the internet. So, even if humans don't use it, routers will use it. Web browsers will use it. Web servers will use it. China may censor YouTube. China may censor Twitter. They won't be able to censor Bitcoin. There's no central authority. There's no one you can go to and say, we're going to turn Bitcoin off. Oddly enough, Bruce Lee wrote some great philosophy. It's important not to think about Bitcoin as a replacement for cash or gold or something that works alongside that. It's to think of it as programmable money. And we just cannot even imagine what that will be used for. It's probably easier and cheaper to counterfeit $100 bills than it is to counterfeit Bitcoin. Cryptocurrencies like Bitcoin are already trustless. Any machine can accept it from any other, securely. They are nearly free. They are global, no central bank required, and any machine can speak the language. There's so much innovation going on, and there are lots of people funding that innovation, but there's very little innovation on that infrastructure for innovation itself, so we like to do that ourselves to help companies create more tech companies. If you're investing in a company in the Bitcoin economy, you have to compare the valuation of the company to the valuation of the entire economy. The best founders are extremely thoughtful and have an eye for quality. I don't know if there's any generic advice here that would be helpful. Startup knowledge is a moving target. We are seeing a lot of cases where the startups are writing the term sheet, dictating the terms, selling common stock instead of preferred stock, where they don't give the investor veto rights or board seat or privileges, and they are really asking the investor, why should I take your money when there is other money available. I think almost everything about humans and human civilization is explained better by evolution than anything else. Entrepreneurship is really hard and painful. I'm not sure I'd recommend it for anyone who can't handle the extreme stress. Getting in the middle of financial transactions is a regulatory minefield. Any competent programmer has an API to cash, payments, escrow, wills, notaries, lotteries, dividends, micropayments, subscriptions, crowdfunding, and more. One philosophy I have at AngelList is I would rather have someone working on the wrong thing and do it their way and be motivated than working on the right thing and do it my way and not be motivated. All of the marketplaces like Prosper, Lending Club, etc., as they get larger, they flip from being retail capital to institutional capital. VC firms that don't have a brand are going to struggle. Because there is a lot of money out there, you need to have a point of view, a brand, to really add value. You can't just talk about it and say, well, we are smart people. The ledger, the distributed database, it's called a blockchain, is held in the cloud by all the parties involved. It can't be broken by any of them. It's cryptographically too strong. You would have to compromise the entire network to take over Bitcoin. With tech startups, it's all loosey-goosey. You raise money as you go, often from friends, family, and investors. When the venture industry started, it was enough to just have money, and then it was enough to sort of have this big fuzzy brand. But now startups are getting a lot smarter. Just as the web democratized publishing and development, Bitcoin can democratize building new financial services. Contracts can be entered into, verified, and enforced completely electronically, using any third party that you care to trust, or by the code itself. If you use a bad password, your Bitcoin will get stolen. I think it just helps to be very aware that fundamentally, there are no adults. Everyone is making it up as they go along. You have to find your own path, picking, choosing, taking and discarding as you see fit. Nation-states that are used to imposing capital controls will face a quandary. Ban cryptocurrencies and live in the technology dustbin, enable them. And this virus, this religion, this protocol will enable the free flow of money and language, along with packets, around the globe. Unlike a normal venture fund, we never stop raising capital. We can always absorb new capital on the platform and into the next deal as long as we feel it won't distort the allocation and the pricing. Our mission is to help founders, and anyone or anything that helps founders helps us with our mission. Be present. Be meditative. Form real friendships. Stay away from business networking events or friendships where there is always an underlying business angle. I think of Twitter as the place where I go to have a great conversation when I can't have one locally, which seems to be all the time. And the more time that I spend on Twitter, the more I sort of curate this incredible group of very intelligent people that I just get to know purely through the quality of their thoughts. ICOs are obviously a new and interesting form of funding for blockchain-based protocols, but it's not clear that all of them comply with U.S. securities laws or that all of them are companies that have good native use cases for new coins. A blockchain is a series of blocks. Each block is a series of computations done by computers all over the world, using serious cryptography in a way that's very hard to undo. We're going to try and prove to the market that you can do a legal coin offering. If the SEC doesn't crack down, this party will be amazing, the biggest party in town for a long time. If they do crack down, a lot of people are going to feel a lot of pain. Having $1 million net worth doesn't make you a genius, and having less than $1 million net worth doesn't make you a fool. Humans don't need math-based cryptocurrencies when dealing with other humans. We walk slowly, talk slowly, and buy big things. Credit cards, cash, wires, checks, the world seems fine. Cryptocurrencies are an emergent property of the Internet, almost a fifth protocol in the Internet suite. If Satoshi Nakamoto did not exist, it would still be necessary to invent them. Cryptocurrencies will create a fifth protocol layer powering the next generation of the Internet. Take a very small amount of money, your throwaway money. Treat it as if it's already gone, you've mentally set it on fire, and put it in some distribution of a few truly legit layer 1 blockchains. People come in. They are too gung-ho. They invest too much money in things they don't know. They lose it, and then they clam up and stop investing. Then they miss the actual boom. That's the nature of the market. If you go to a venture firm, what you're doing is you're buying money from them in exchange for equity. They have a commodity that they're selling, and they have to differentiate themselves. At the end of the day, what makes Silicon Valley work is technology and the outcome of making money. Those two things have to be healthy. It has to matter a lot more than who is the celebrity and who is famous and who goes to the best parties. Our model is very, very different to LinkedIn. We only deal with very small companies. We don't have any support for recruiters. In fact, recruiters are not supposed to be on angel list talent. It's a direct market where we connect CEOs and the founders and the head of products with their talent directly. We just think it's important that everybody have some technical training and background. Even though not everybody is coding, but even our deals team and our designers all have GitHub accounts, and they go into the code base. I don't like having managers. I don't think I'm any smarter than any of my developers. For us, just serving the market in the US and the UK, we can barely make the math work on an interesting business. My sense is that our clones and copycats are very manual. If they make it work, then congratulations to them. Rules that may be easy for Wall Street are a death sentence for startups. They are easy to break accidentally, and the penalty for noncompliance is severe. Startups often want to control the timing of their financing announcement and prefer not to reveal amounts raised for competitive reasons. If more of the Form D information was confidential rather than public, compliance rates would jump dramatically. Startups are constantly raising money, sometimes before they have even hired a lawyer. In an ideal world, you raise a lot of money and then there is a downturn before you start investing, so you get better deals. But it doesn't always happen that way. On AngelList, we get 100 new companies created a day. That's an insane flood.